welcome everyone to this hot topic briefing by Emerging Payments Association Asia. So I'm Camilla Bullock. If we haven't met before, very likely you got a message on LinkedIn by me saying this is the session to join for you, because most likely you are a payments leader and what's happening in the world is changing and this is impacting you. And that's what we're going to unpack today. So this is not going to be your normal geopolitical risk commentary. We have heard a lot about them over the last couple of months. What we're trying to do for you here today is really to, like, in a more honest way, look at the here and now, the operational impact, what is breaking, what's being rerouted, and what are the trade-offs. So at Emerging Payments Association Asia, we drive advocacy and policy to improve the payments industry. We have more than 90 members, and everything we do is to help our members to position themselves well for challenges, opportunities, so they can enhance their services to their customers. And very likely you are part of our community, as you hear. And so today I also have members from my advisory board, plus our partner from Monash University, Professor Nafis Alam. So welcome to Maylam, CIO from AP Plus, Lars Sjögren. He wears many hats, sits on many boards, but's been in global transaction banking for, I think, more than 20 years. We also have Anton Radenklau. He might not be on yet, but I trust he will join us shortly. He's heading up the Financial Services Advisory for KPMG and also has the hat of Global Head of Innovation and Finance. But I'm going to take down the names now so you can see me more clearly. And all the participants we have on the panel today is really bringing different perspective, and I think we should take that into account. But while doing so, we're going to launch a poll so we see what you are thinking about what's happening. Where are you seeing the most immediate impact on cross-border payments execution? And Anton has joined us also. Welcome, Anton. And while we're getting this poll up, I'm going to say how we see that our participants are joining. So Maylam, being CIO at AP Plus, she's really bringing in and sitting in the center of payments infrastructure. So I'll ask her more questions around multi-rail execution today, and she can see how it really looks on the rail side, so not the user side. So welcome, May. Then I have Anton Radenklau, and he's going to bring in more the dealing with a lot of the institutions across Asia. So you can really see how they are responding to the current environment and what they are saying they are doing and what they are doing. So we're going to see a little bit on gaps in between that. Lars, we're seeing you bringing in your full European perspective, so a little region to represent here, but also board level experience and how financial institution navigating systematic changes. And then Professor Nafis, we asking you to do that really bird eye view, structural academic lens of when we go too deep into the operational weeds, just pull it back a little bit and use a little bit of history backsides. What could we expect to see? So what are we seeing? It's very even here, or I'm guessing that not that many people have voted. That's normally what happens. But one people voted. If you're shy and you don't know, why don't you just pop in what you think you want out of this session? So if you have any question, please pop them into the chat, and also where you are sitting today. That would be fantastic. So location, I mean there. Good. Let's kick this off. Anton, you were slightly late, but right on the money in joining. Speed versus safety. Are institutions routing around risk or around compliance? So this is a question that is quite hard to get answer from, of course. It's has a bit of tension in there. But what do you see actually? What are experience, and probably without naming names?
Sure. Yeah, I'm happy to talk about that. A few things. So we were involved in some of the impacts of the Iran-US war at the moment, particularly around screenings for sanctions purposes, around monitoring of payments, and around the view from, say, regulators like OFAC or FATF that, shadow banking activities come to the fore when you're talking around these types of conflicts. So the use of cryptocurrencies, peer-to-peer wallet technologies to be able to make payments work. And that comes ahead in the likes of toll payments from the cargo operators and the operators of the ships in the Strait of Hormuz, who have given very, very short windows of matter of seconds to pay their tolls as they move through and out of the straits, touch wood, into what they need to do. So there's been very, very clear guidance come out from global regulators that sanctions will not be breached. And this is local regulators from, say, Dubai through to His Majesty's Treasury in the UK and to some of the US and multilateral regulators as well. So that's kind of one area that we see a real enhancement at the moment of. And I think that's always been here. I think there have always been digital wallet providers and others who thrive on conflict, whether it's Central Africa or ill-gotten gains that go to certain countries north of Mongolia. So that would be one I would say is a big, big topic right now. The second thing we hear from our clients is kind of the brother to payments, which is trade finance, because obviously supply chain finance needs to hold the weight of currency volatility at the moment. Probably having product sitting on the water for much longer than people would like, the rerouting of major supply chains away from conflict as well. And so we've seen a big, big move from open account trade back to traditional sort of trusted sort of trade mechanisms. And that does have relevance for payments because an open account we would make payments based on risk from data sources in times of risk like right now. People move on to guarantees, standby letters of credit, etc. So that's a big play. We met with most of the big transaction banks last week, the ones who would, I'd say, finance about 80% of the world's trade. They're actually doing quite well. They're prepared for these sort of situations. The trade credit insurance firms are helping as well. And there's general sort of industry alignment on how to support that. So you've got on one hand shadow banking and nefarious actors and the requirement to make sure that bad things are not happening on sort of non-swift rails, if that makes sense. And on the other side of the fence, we have the trade finance teams ensuring
Mm.
that people are still serviced well and we're not having liquidity crunches off the back of those supply chains. I'll stop because I know
Yeah.
you want to hand on to someone else.
And no, it's all interesting, and I find it feels like almost just yesterday we had a similar webinar on the Russia crisis, and I think that's when everybody actually realized what a big impact payments and SWIFT has for
Yes.
those kind of crises in the world. Lars, that was closer to home for you when that happened, but I guess everything is global now anyway. How are board discussions around this, and is it sometimes just prudent rerouting?
Yeah, I think that this is, again, every crisis is a bit unique, and we tend to bring with us experiences from the last crisis and adopt from that one, and then try to solve things more or less based on experiences, right? But every crisis is in a way unique, I would say. This one has actually some specific complications with regards to the Strait of Hormuz, right? Okay, so you have a ship, you want it to travel through the strait, right? And then you're expected to pay something, right, for a safe passage there. At the same time, U.S. authorities say if you do that, then we will put you up on some sanctions list, right? To take it a bit to the extreme, right? Maybe or maybe not, right? We don't know. So how are you going to deal with that from a board perspective? Sort of what are you actually prepared? What risk are you prepared to take? And I would say that no serious institutions try to bypass compliance, right? So what we really want to do is to again help our clients, because that is basically the discussion we had on the board of directors meeting for the bank, where I'm actually also the head of the risk and capital committee. We actually discussed sort of to what extent are we prepared to help our clients to get around this or not. But this is where we are, and in a way, I would say that what are then the options that are available? And I think that and Anthony, you pointed to some of the options there. Is it now time to go to Bitcoin and do it that way, or what have you? If you are the operator or the shipping agency, right? But from a banking perspective, I would say that we are extremely cautious on this and try to do as little as possible, because to us compliance is actually most important today. We don't dare to go too far out on the curve on this one. I think I will stop there.
Yeah, thank you very much. And I think both of you putting forward this, there is tension. There is a lot of tension and trade-off here, and different camps as well that have different things to win or lose on it. So let's sit a little bit more with that and go into the topic of RMB. So I wrote as a question here, RMB as hedge or structural shift, real change or something that unwinds when conditions settles. And Professor Nafis, I'm going to turn to you with this one, because again, we lived through this several times when we think it's going to be shift in currency dominance, but then it doesn't happen. So what do you see? What are the discussions? And even if you glance back in history, what do you think is unfolding?
Before we go into the current situation, I just want to take a step back. I think any particular country, one particular country which has gained the most out of this geopolitical risk is China. Without doing anything in this one, they have been holding oil for quite a long time, and now they are even predicting to be one of the major exporters when everything settles down. But that's on the economic side of it. But let's look at the currency side. Even much before the war started, there have been a gradual shift, a structural change happening over the period. If you see the US dollar dominance in the early 2000, most of the 90% of the world, more than 90% of world trade used to happen in the US dollar, which has been gradually declining over the period of time. In the 2010, it came down to 85% on an average. And if you look into 2020s, for example, now that value is coming around 75 to 78% of trade happening in US dollar. So this is not like one event which has transformed this, but it has been going on for a longer period of time. Mostly the usage of renminbi as a trading currency has been happening in Asia and some part of the Africa where they are trading in yuan. For example, even Iran was exporting everything to China in form of renminbi. Forget about any to deal with the USD because of the sanctions. So I will say if we look into that, the renminbi usage is both cyclical. It is a hedge, definitely, because people want to move away from one dominant currency and want to protect about how the market fluctuates and how the currency operate in that. But at the same time, we're also looking into the gradual shift into that part. So let's divide this into a clear area. So one thing is to look into why people use renminbi as a hedge. It's basically maybe more towards the volatility and fragmentation happening. Most of the Asian corporates and even G2G, for example, they have been invoicing and setting trade in renminbi because of the sanctions, because of the geopolitical tension between US. I give example of Malaysia, where I am based. Malaysia has been always friend to both US and China, for example. They don't criticize openly about any of the thing, and they trade in both renminbi as well as the US dollar. So basically, the shift has been going on. At the same time, if we look into the global reserves or the central bank reserves, they have been also diversifying their settlement currencies, not to be completely focused on one particular thing. So this is basically a response to have this period of uncertainty, and this is not going to stop with this war. In fact, this war has I will say has accelerated the diversification accelerated the hedging, because now, given that this can happen anytime, and the whole geopolitical, the whole alliance, global alliance, has been changing in that sense. If you look into the structural shift, for example, it is also becoming like most of the ASEAN economies have been doing the renminbi invoicing. If you look into Vietnam, for example, if you look into Cambodia, Laos, they are looking into a parallel race to the USD-based system, because again, with the tariffs coming into place and the heavy dependence of the China economy. So you have to also look at the size of the Chinese economy with the trade happening. And not to forget even the Malacca Strait, for example. And there was a recent thing, some people are talking about whether Malacca Strait will also start charging tolls compared to the Hormuz. So you have to look at the whole geopolitical scenario in that sense. I think I can keep on talking on that. But if you have to look into the functional usage of renminbi, it is going to be increasing. There is also a trust coming up, because China, even though is a dominant economy, they are not part of any of the war. They do support based on their own interest, but they're not initiating any war in that sense. So it becoming like a more stable in terms of the consumption. If you see that that's going to be the biggest economy, India may oversee that. So any economy which need to have, which is an exporting nation, need to have a very clear strategy that where they want to do that. And given the conflict between China and the US, especially in the current regime, this is not going to stop. So I believe that the 75 to 78% of trading in US dollar might even come down to 70%. It will not completely overtake. This is going to be another century to happen. It will not overtake, but definitely the reduction will happen gradually. It's already happening, and maybe in a decade we can see that it can come down to 70 or less than 70%. I'll stop there, and you can convert.
Yeah, thank you. And I think Shankar was doing a comment in there also that it's still USD is still 81% on SWIFT, but makes me think about both what Anton said, it is payments, it's trade finance, and also what you're saying about reserve currencies. Those are not shifts that we see overnight. It takes time, it's structural. But May, what do you see? What do you see happening on rails from where you're sitting?
Yeah, so first of all, I actually really agree with what Nevis talk about the structural change, the repositioning from that. But I probably will reframe the question more as it is not a binary, it's both hedging and a very strong early signal of structural repositioning. And so it's less about the replacement story, but more of an optionality story. So it's a diversification of that. And I do agree that through this war, China do have the edge of that, especially they have alliances in the whole Asia region with the One Belt One Road initiative, which started like over a decade ago. So I think from my perspective, I see that the dollars remains dominant as the stat I have shared. But that's changing is that the jurisdictions want greater control over the assets on payment under stress. So what is matter at the time that matters. So in the near term, that institution clearly are now moving to renminbi or crypto exchange. But just even this week, there's so many news about the sanction. So the USD corridor is now constrained, but at the same time, the sanction, the compliance frictions, the liquidity pressure that's mentioned by Anton, the renminbi is a clear alternative path. But what is different this time is the infrastructure is maturing. So systems like cross-border interbank payment systems, the SIPs, along the bilateral trade agreements that is happening right now, are making renminbi settlement more operational viable for long term. So it's not just politically attractive. And the SIPs just hit the records volumes in this month, in April, reaching 1.2 trillion yuan in a single day. So I think that is something definitely need to watch, but also seeing that the fermentation is happening. So USD remains the anchor, the global anchor, the renminbi strengthened the regional across the Asia corridors, and institution now rapidly building the optionality across currencies. So this is a real shift. Isn't just about currency replacement. It's a multi-currency reliance by design. So back to from a technology perspective, we're moving into a more from a single dominant system to the world that institutions need to operate across several simultaneously, and even institution to institution. So not just from the jurisdiction perspective, is making the different MOU agreement, etc. So I think one thing that from the innovators or the policymaker perspective, both sides thinking about the infrastructure perspective, it means building the system that support interoperability, and multiple pathway. I think the conversation maybe 3 to 5 years ago is about efficiency, about the speed and the cost, is now moving to a more national agenda, the strategy. So I'll probably stop there. But it's, yeah, I do agree that the both Nafis and Anton's insight. Yeah.
Yeah, I'm going to stay a little bit on this topic because I think it hasn't been talked enough about, and it hasn't been talked enough about what's actually people are saying they're doing and what they're doing. So going to see if Anton, you have any insight on this. Like, is it really like change that they look at? Are they just building on dollar denominated operating models for time being and just to coming over this patch? Or do you see actually that institutions are shifting how they're tending to do business in the future?
You're talking about digital currencies and assets.
Both actually, but
Yeah.
both like what rails you're choosing to use and as well what's the denomination.
Yeah. So probably maybe if I just can I reframe it slightly differently. So a couple of things. So I'm looking at the questions in the chat there as well. Firstly, just to be clear, when I started talking around Bitcoin in particular earlier on and paying tolls to the Iranians, that is a real thing, by the way. That's not hypothetical. That is a real thing. And there is a very, very clear protocol that they've established to do that. That is the cryptocurrencies in the shadow banking world that I was referring to. That doesn't imply that people in times of stress are going to go out and use more digital currencies and invest in stable coins and get Circle or whatever and go and trade with that. That's not, the two are not connected. It's the ability to be found and have a KYC or a digital identity sitting behind you, which is exactly what in times of war people don't want. So they don't want to be found, and they don't want to see their money come into the system because of sanctions. And it's specifically sanctions. And this is not just Iran. There are sanctions implications in Africa and other parts of the world as well that have been politically motivated or otherwise. So that's one bit just to sort of, I think, just to level set on. And there is a circular, a paper from the regulators specifically about this topic right now and how it works and all that stuff. So that's one bit. Secondly, the polarization of technology, which has been loosely referred to. So is China gaining through this on SIPs, and will BRICS pay and things like this become more relevant? Absolutely. That's the reality. And why not? Because on BRICS, for example, the non-SWIFT platform, there are 17 or 27 markets that want a viable future, and at the moment they feel like they're being penalised by the West. So that does kind of give more power to those types of platforms to rise. And there are further of these sorts of platforms that are either planned or in development in parts of the world where they do not want to be part of SWIFT for whatever reason, and they want to create their own sovereignty as well. And that comes to the sort of final point that we've all been talking about. People have woken up more recently and realized that payments is a sovereign asset. Whether it's a case here in Australia where, I can see Mao on the screen where she lives in terms of digital assets, or Pontus in the so-called EU CBDC. This is going to become increasingly something that's important to regulators around the world. What technology do we have? Do we have control of our own money? Or do we cede that to Palo Alto? And I think here in Singapore, where I live, our regulator talks around having to work in a bipolar world with technology. We need to be able to accept Chinese technology. We need to be able to accept US technology. We need both because we sit at the center of both of those two great ecosystems, let alone what we might be able to create here in ASEAN as well. And you look at the likes of, say, NCPI and UPI in India. It's another example of sovereignty around payments. So I do think this war and this, or whatever you want to call this thing that we're having right now, but that will just accelerate, I think, this, and that will include the de-dollarization that was referred to earlier on. That's got to be an outcome of all of this as well. Final one for me, there's a lot of people running around the world who talk around the need for digital identities. This does kind of argue that actually digital identities and with digital currencies, those two must sit together as we move forward if we want to take black and grey economy activities out of what we do. And I'm not too sure where that sits in the G20's initiatives at the moment, but we shouldn't leave it to country regulators or politicians to try and push that through, because every time that happens, they fail because it's not a vote winner. So anyway, I'll stop. Hopefully it's
Absolutely.
helpful.
I don't know how many pages in notebooks now that I have written digital identity exclamation mark. I think we put it in the too hard to deal with basket, like around 2020, but it's early. We just need to pull it down. There's no many forces that say, oh, we just have to crack this now, or it's going to get very expensive and very risky. Lars, I know that you've been part of an influential in decision, even what Anton is talking about, like where technology is coming from and the sovereignty of where the systems and where the flows goes through. I'm not going to give you a specific question. I'm going to give you the chance to comment on what the others have said so far, because I think you have slightly different perspective from the Europe.
So unmute. No, I think that sort of the R&B discussion in Europe is not that active actually, because we are basically sitting a bit on the side there.
Is it selective exposure more?
Yeah, but I think that we are sort of occupied with other problems here at this point in time, and I think that after 2022. The Russian invasion of Ukraine and what happened with the SWIFT system, and I think that everyone realized that dependency on one system is not necessarily a good thing, especially if you are sort of on the brink of this and see that now we are sort of the division in different blocks around the globe, and I think that started also the fragmentation, and I think that is fragmentation good or bad, right? Having one system that operates nicely, there's a lot of single point risk on that, but fragmentation actually creates other issues. Right. So is fragmentation good or bad? This discussion also on the chat here, sort of what are the total volumes of stable coin today, right? The volumes are massive, but it's a lot of trading, not that much trade. So that is really, so you can look at it from very different perspectives. But there is a high degree of optionality today, and on the digital ID discussion, if you have a ship, you want to pay your safe passage through Hormuz, right? You will not use a SWIFT transfer at that point in time. Nobody dares of doing that, right? So you go other ways, and there are options there. Then we have sort of the control over infrastructure, and I read Eurosystem last week published a paper saying that, guys, everyone, now you really need to look at your national infrastructure. So you need to make sure that one is safe and sound and secure, all of that. Some years ago, everyone said, oh, we need to do these regional initiatives, and Eurosystem is an example of that, right? So I think that I'm not sure that I can land this in one, conclusion to sum it up. But in Europe, we're a bit on the side on this discussion, but we are facing the same challenges. We are just trying to solve it through regulation and DORA and all sorts of control mechanisms in Europe, as always. I will stop there, Camilla.
I have so many questions. I could have like 1 hour with each of you and just follow-up question.
Yeah.
Is fragmentation good or bad? I just have to jump over to May to ask that one because she's probably battling with this. Because one thing we do know is that fragmentation drives up costs. So who pays?
Yeah.
May, do you want to comment on this? Fragmentation, good or bad?
I think fermentation is unavoidable. I think the question is more as the concentration risk is. So I think that's not good or bad. I think traditionally we drive more efficiency, consolidated it from fewer, like lesser wells, lesser intermediaries, more standardization. But I think that in this fragmented or multipolar world environments, the conversation is really changing from all the efficiency into the resilience. So the national sovereignty, the national infrastructure conversation, Lars already bring it up. So I think more of like as your second part of the questions that moving into who absorbs the cost, I think costs don't disappear but then it will get redistributed. So that often is invisible. So the more resilience I do from the technology perspective, I do believe to a certain extent that we can buy resilience, but whether it's the right thing to do, because there's a cost that will be borne. So I think that again, the honest answer is the cost doesn't really disappear. It's just become a less visible and more distributed. So from the different rails, whether Web3, whether Web2, in the theme of improving the interoperability, the operation resilience, and the giving them more choices, accessibility, and optionality. I think that's the cost we in different themes. One is about liquidity cost, so across multiple corridors, creating that kind of trade. The second one is the operational overhead. So we build more redundancy, contingency, and different interoperability. The maintenance of that is another cost that we borne from this resilience lens. The compliance complexity. So especially spanning different jurisdictions and currencies. So that's different. We touch more different corridor in terms of a compliance perspective. So I think that's the key is that how in this process, how can we provide more visibility of where the cost to be absorbed? It can be by the bank, by the institution, by the infrastructure players like ourselves that we actually invest in the infrastructure. And it can be to the corporate client, to the end users indirectly or directly through the foreign exchange and fees. So I think in this way, it's more about promoting that visibility and then having the detailed conversation, understanding not just from the build perspective, but from the run side, and how can we reduce this friction of maintaining this fragmentation and complexity, because it's both fragmentation and the cost is not moving away. That's
It's almost one of those like cost benefits or whatever you say that you can't do because it's so many different unknowns and so many different scenarios and so many costs we can't measure up. So Nafis, now coming,
it's more like the transparency, predictability, and then having that conversation.
And what is the cost when something breaks? Like that's the one that is very hard to quantify, and even the trust element in it, or when you're locked out for days, it's and it's actually a lot of things that we often talk about in our quantum safe cryptography working group, because it's threat as threats almost, but how do we prepare ourselves for them? Nafis, I'm going to come now for more that like bird eye view as an industry. I mean, May is an expert here, so is Lars and Anton. But do you think as an industry, are we collectively underestimating what's going on and the impact it can have on market society?
I think the market is evolving, and always a conflict or change of the economic orders provide that opportunity. I think it's not only about the currency which we're talking about, it's also about the digital asset we're talking about. So if we have gone back and look into how that the geopolitical or economic reordering has happened, you can go back all the way in the history of the Bretton Woods, Asian financial crisis, 2008 crisis. Every time you have some financial crisis or economic crisis, you can see that the shift is happening in the whole monetary on the economic system, and that's what is happening at the same time. And this is an opportunity. I think that innovation comes into place. Even though we are talking about the currency, but the shift is already happening not only from the currency, even the quantum is small for the digital asset, but they are going to take up a leap because of this peer-to-peer transaction and bypassing, and the fluctuation will be a little bit lesser compared because not dependency on the actual system, and the people will be moving about. The classic example is when Hormuz was closed and Iran was not asking in RMB or USD, they were asking in crypto tool. So you can see that initiative, why they are doing that. So it all comes back to one thing is about the resilience and the redundancy in the system. So whether you have multiple rails, whether it's Swift, real-time wallets, multi-channel models, but you have to see that what is the end point. People are looking to trade in goods, whether it is physical goods, virtual goods, or whatever not. They are looking into having less dependency on one form or another. The second thing is to also to identify how you overcome the challenges, because you're not going to trade into a particular currency or particular value which is going to depreciate over a period of time. So it is going to, and I think this gives an opportunity, whether you are looking into the regional currencies, which might not happen. You will never get an BRICS level type of currency, or you will never get an ASEAN type level of currency. Even these economies are growing because you need to bring people of the similar size and similar economy to come together. But one area which will keep on evolving is the digital side of the payment, which will bypass and which will be borderless in terms of that notion. So I will think that it is going to have a lot of changes. There will be a lot of reorganization will happen in the overall monetary and payment system, and also it will accelerate the regionalization of the trade. People will start trading more regionally and more interconnected, and they might identify the form of the payment or the type of the payment they want to be more comfortable. So, for example, if you look into the interoperability in the ASEAN, it's a very classic example. You can see most of the ASEAN countries are now getting more and more closer with the interoperability of the wallet or the QR system being used into the payment. Why is that case? Because they don't want to do into a multiple channel of trading with via US dollar and have the depreciation. Not every currency, for example, Malaysian ringgit is the most popular currency at this point in time, most stronger currency at this time. But if you look at the other currencies in the region, Indonesia or Thai baht, they are not performing well. So again, that over dependency on certain currencies will also change. So so the economies will be looking for the options which will be a combination of all. So I will say it will be changing the order of how the global trade and the payment happens rather than looking into one form of another. So it may be looking into a diversification, a portfolio of different channels coming into the payment ecosystem. And the challenge will be the compliance and regulation, which is a very big area to talk about. How do you manage that when you do not come into the actual purview of all these flow of currencies and flow of activities happening with that? So that's a bigger headache, which we are not talking about in this forum, but we are talking about how the structural shift will happen. So I believe that the economies as well as the corporations are waking up, and they are trying to look into how, and this type of forum, what we are discussing, or even in the events which are happening around the thing, how people are looking, how corporations are looking to diversify and change. So that will be the future of the whole payment system and the trade system, I will say, happening in the next couple of years or next decade.
Nafis, did you just come up with the idea that we need to do this at EPA Connect also in KL on 16th of July to unpack it a bit further?
Interesting topic to talk about.
Absolutely. And I think this is going so far through different topics, but Lars, I think do you want to add something on dependencies you think that we might be missing?
Sort of what happens when dependency sort of goes out. But first a comment, Camilla and the rest of you. If we really want to get sort of lower costs for transaction, we know payments is a scale game, right? And FX is a hustle. So the easiest way, actually, and it's not easy, but one infrastructure and one global currency. That would actually
one ring to rule them all.
Yeah, no, but that would actually solve it, right? And the question is this sort of realistic or not? Probably not, as we know. But fragmentation is driving cost. We just need to realize that. And G20, they have realized that they are they are not really reaching their 2030 targets the way it looks now, which I think is a big problem, right? Because we need trade, we need to have efficient payment solutions, we need to have transparency, all of that, and it's moving so slowly. Then we can say, yes, of course, it has to do with some geopolitical incidents. Russia, it could be this, it could be that, right? But still, I think the ambition is there, but we are not really making progress, right?
No.
So I think that sort of, but no country, no currency is an island, which means that we need to find partners, we need to find corridors, we need to find trust out there in order to make this work. Because again, our clients, they expect money to arrive at where they want it to arrive, because they want to pay for some goods that they buy. And I think that is really what this is all about. And then what is the best payment solution at the given time? It will continue to vary, right? It will be one day it will be one, another day it will be something else. But as an institution, we will never recommend our clients to use Bitcoin, right? That we will not do. We will try to find other options for them, and there are many out there. But basically, they are building on the same infrastructure anyway. So that's where we are.
Coming back to that with the fragmentation, what new tools are we going to use, and how do we create interoperability? But on the end of those sessions, I jump on the call to Monica Yutoya, who's joined now. Also, she was just a little bit late, but here she's on now. So she is the one that helps me to synthesize those topics we have on webinars into our working groups. So I'm going to let Monica. Do you want to ask questions to the panelists and makes our job easier afterwards? Because I'm sure that you're burning with something.
Actually, I do have a question to everyone. Nobody's mentioned the resurgence of cash and how that has become a hedge against what is happening, because there is reliance on banks to actually be the bearers of instruments that we want them to hold. And all across the world, people are reporting that they are now insisting on actually holding some cash, because you never know how the political situation will escalate and what is likely to happen. Any comments on that and the move towards cashless?
I can comment. I can actually try not that. Cash will not solve the problem. We know that from Sweden. We are basically cashless, and the Swedish central bank tells everyone that you should have at least $100 at home in cash, so you are prepared to. But that doesn't help, because there are basically no stores are accepting cash. So saying that, try to go back 20, 30, 40 years and solve the resilience problem by that, it's actually absolutely not possible, right? What I think what we need to do in a way is that we need to design our digital payments solutions so that they actually work offline as well. There are ways of designing that. They are designed right now for uptime much more than resilience and offline. And I think that we need to go back to the drawing table and start think about, okay, it's not only uptime, it is actually what happens when the lights go out. That, I think, is one of the most critical discussions we need to have, because we cannot go back to cash. That's just not possible.
I will be on the opposite side of the Lars on this part. What we have not checked on all this war happening is on the disruption to digital system. We didn't talk about cyber security. We didn't talk about cyber attacks. And given that whether you are aware or not, but Iranians are very, very good into hacking and cyber attacks. So if you are looking into very interconnected, well-connected digital payment system ecosystem, and if something happens with all this cloud being impacted, or the digital payment system, some of the companies are also having a challenges in the Middle East where they're not able to use their cards. During the early days of the war, some people were blocked to use the card because of the challenges of some disruption in that. So, Monica, I think cash is always going to be a preferred one. It is not going to be impacted, and especially if you look into the economies, and I think that is also a very well-known thing, that a large part of the ASEAN economies or the developing economies are very much reliant on cash yet, So definitely instance like this, which can lead into not from the physical or infrastructure attack just on the war system, but rather than on the digital system, which can impact the flow of money digitally. So I think this gives an idea of how cash can be a resilient part of the payment system. So I believe that there should be a good amount of cash holdings as well. I think a lot of central bank does that. At the times of the crisis, they also try
Yeah, I
to.
was going to say this Swedish central
Yeah.
bank already provided recommendation for household to hold the
See?
minimum cash. Yeah.
So
Yeah.
yeah, so I think it will be an interesting scenario, and I think cash will be always the dominant, especially in the vulnerable situation. We haven't come to that part, hopefully not. But if that happens, the digital system getting attacked, which can be done. So it is so that's another aspect of cyber resilience and the system which we're talking about. So cash will definitely be dominant and will be remain attractive for many economies, Monica.
Thank you so much. This was what I was expecting. And another question that I had was, Anthony, thank you for actually talking about the state of Hormuz and what is happening with them accepting Bitcoin, which is becoming more relevant. But the one question about the fraud, the cybersecurity, other aspects is about compliance and whether there will be new laws and regulations associated with what is allowed during such activities, because compliance and AML safety checks are not possible when you're in a state of a national emergency, which is absolutely the case. And you can't rely on, and Lars said it beautifully, that you can't rely on a swift payment to happen at that point in time. So does this actually legitimize the use of stable coins and other sorts of currencies, or legit or not, but unregulated currencies that will now become more mainstream? That's my main question.
Is that to me, Monica?
Yes, please.
Yeah. Yeah, so, I mean, just a couple of thoughts. So I suppose again, we just got to be clear why Iran wants Bitcoin, and it's not because they want to be a good corporate citizen and they want their money to be traceable. So I think the reason they're using Bitcoin is specifically not to be found. And if I look at the guidance, I've got the guidance note sitting in front of me here at the moment. The regulators refer to the chain analysis tools. Here you go, chain analysis, elliptic, TRM Labs, develop sophisticated clustering algorithms so they can track Bitcoin, etc. Right? It's in the guidance. So I think going forward, if bad people want to do things that are nefarious and they want to sit outside the system, they'll work out a way of doing it. Maybe it's a suitcase of cash, right? But if they want to be found or they want to work in systems, I do believe things like stable coins and tokenized deposits and deposit tokens and whatever other form of institutional currencies you want to have, the mechanisms are going to be put in place shortly to make sure that those are traceable and observable by regulators, by governments, etc. There's no doubt about it. So those two things I think go together, and I do think there's an increased sophistication. I just mentioned some of the vendors in this space. So that's one I think definitely to watch going forward. I just referred to a couple of comments also on the chat from TS. I can see he's posting bits and pieces. I get tired of stablecoin vendors who are completely independent. Of course, they're independent, saying that stablecoin is a material element of the economy going forward, and that banks are withdrawing from trade finance and replacing it with stablecoin. This is, of course, from someone who's a stablecoin vendor who wants to sell more of their product. Completely independent press release. And so we've got to, again, get real. I think it was mentioned earlier on. Stablecoin at the moment is used primarily for trading cryptocurrencies. It's not used for real economy at all. And the people who keep pushing these myths are not doing anyone else a favor in the legitimate economy at the moment. They're just putting out fake news, as Donald Trump would call it. And so I welcome stablecoins and I welcome the opportunity for those to fill the gaps. But again, they'll be used for legitimate mechanisms for more efficiency in our currencies. Bad actors will not use stablecoins if they can be caught. That's the reality right now. So I think, again, this will push more digitization. And I just point to a couple of other data points. Citi put out some really good analysis recently. By 2030, and this is their forecast, so whether we believe it or not, it doesn't matter, but it's directional. They're saying that 1.9 roughly trillion US dollars worth of transaction flow in 2030 or through stable coins. So that implies that it moves into the real economy and actually acts as a good currency for the world. Tokenized deposits will be anywhere between 100 and 140 trillion in transaction flow. So the banks, in other words, when the banks get their act together and they start to deploy their balance sheet through cryptographically hashed currencies, are going to dominate. That's the reality. And I wish we would just kind of get to that point and accept it, and realize that yes, we need stable coins, but tokenized deposits and bank money will rule supreme. Why? Because they've got the balance sheets right now. And again, as I mentioned earlier on, and I have this from legitimate sources, at the moment they are not debanking based on Iran. They're not debanking on Congo or Russia or any other, or Ukraine. They're actually providing more liquidity to these markets. So the myth is incorrect from the non-independent stablecoin provider. So just to correct the record for everyone.
Awesome. Yeah, we had that readiness barometer in Bangkok the other day. You weren't as vocal then, but it's good. I think it's good that we put some numbers on in scenarios when pockets are maturing, and then we can see how that comes, because of course the interoperability challenge is there, and we get that right. It might look slightly different also. But May, I will let you. We're sort of coming towards the close of time. But I was going to ask all, but I'm going to ask you, and that might open up the last sort of block of discussion, is what haven't we talked about yet? What is the one question that we really should have unpacked this? We've gone our way through dependencies, resilience, RMB, and also agility and trade flows. Is it something you feel like I wish that we also could unpack this when we're here?
Can I say AI in the mix of that?
On the 52 minutes, we've been very good today, I think. Yeah.
Yeah, no, I think that it is relevant in terms of like whether people think that it's a hype or a real thing of the mythos, the threat, the landscape that into everything, because it is a digital world with a cross-border payment. What is the implication? Like, I think we kind of touch on the cybersecurity perspective. I think that will multiply, and then we grow fast, very fast. And then just in the last week, there was a lot of questions, challenges from the regulator pushing out, a lot of thought leadership also pushing out from vendors, and it's two sides. So at the same time that we are all full steam ahead into the roadmap that we set maybe a year ago, 3 years ago, 5 years ago, I think the question is that when is the best time to revisit the course that we set? Is it still relevant? And with the threat landscape that it's already here and continues to grow, as an industry, how can we be more collaborate? How can we be prepared?
It's a good point. I was at a conference this week also, and it felt the material was prepared 6 months ago and it wasn't relevant anymore. But nobody calls whatever that story is called in England. He doesn't have any clothes. Kejsaren har inga kläder is what it's called in Swedish, but the emperor doesn't have any clothes on.
Yes.
I was on a panel like that, and it felt like somebody call it. I probably should have. Anton, if we had you on the panel, we probably would have called it. Lars, how do you feel about what May is saying here? When can big institution actually call sunk cost and restructure for the future?
I don't know if I even want to start answering that question, right? But I think that what we are looking at today is in a way to be able to substitute, one corridor with another one, and have sort of the optionality to look in different directions. I think that is really where we are today. Then obviously. Sort of, I think the title here was something also about trust, and thinking about sort of trust is where do we have trust in all of this, right? And we have been working correspondent banking, and we have had 4,000 correspondent banks that we evaluated every year, and today we have basically stopped doing that. So for me, this is moving from from trust in individual institution to trust into, I would say, the architecture of the system. So I think that for us, that is really where we are looking today.
Awesome. Thank you. Anton, do you want just a last comment? And Nafis, and then Monica, I'll turn to you.
Yeah, just one thing from my perspective. There's a country in the South Pacific called New Zealand. Has tons of wine, plenty of lamb, lots of kiwi fruit, and good space for everybody. So I keep saying this on panels. When the shit goes down, New Zealand will welcome you for sure. Come down, but like Sweden, right, Lars? Come down, and we will move back into agrarian society. We will not need cash because we will just exchange gifts with each other in New Zealand. So I look forward to seeing you down there.
Nafis, you considering moving to New Zealand, or do you have another line for us?
I think Malaysia is also a good place to settle down in that sense, not too far from New Zealand in 7 hours to 8 hours. But going back to the conversation, I think what we can see that all these conversation which we are having about interoperability, different channels, different rail systems, it's all about a natural response to the reordering of the global system, and this reordering of the global system will always happen when the world is going through turmoil. So this is a natural process. It's not going to change. And every time we have something like this, there will be always conversation. So there will be no one solution to all this thing. But I think we have to look into a network ecosystem of interoperable rails where money can flow. I think we need to create those corridors. We need to create those interoperability, and it will happen into a smaller regional approach, and then going towards a larger, bigger region, and then going towards the global. So I think the integration will be shaping up more with the linkages happening within the region. I think ASEAN is a classic example of that. Multi-currency settlement will start happening. And all will be dependent on the real-time data. It all goes back to the data, how we are looking into that. And again, the important thing will be that how the institution will be acting as the intelligent orchestration of all these systems together. You need to have a system which will be able to operate with all these blocks, and how do we maximize this? So this is an opportunity for us to grow, to learn, and to explore more and more. I think the innovation will be taking a bigger shape with all these geopolitical and crisis happening. And I think we will have more and more conversation on this in the near future, Camilla.
Yeah.
Awesome. Thank you. I'm going to bring up one slide while I ask Monica. We have those, am I sharing now? I think I am. We have those working groups in front of us. We're talking a lot about definition, interoperability, harmonization in all of them. What did you take away from today's session? Anything you feel that this is one that, we talked about trade, and that's one of our working groups where we're talking about the impact, which is both in the risk and in the crypto ones. And Monica, over to you. What do you take away?
I think the biggest one for me is that there is no consensus of what is likely to happen. While we push for interoperability, which is what is a must in cross-border payments, there seems to be the rise of national sovereign systems, which actually means that we are creating islands which refuse to talk to each other or may not like to talk to each other because of the geopolitical situation. This is also something, and also I think Anthony brought this up. We've heard May speak about resilience. These are topics which have been brought up in our tokenized money workshop and our working groups associated, and the workshop that we just did in Money 2020, because these are very, very important for businesses to plan ahead of time and what really needs to happen. So for me, I think these are some of the main takeaways, and I'm glad that we're already having working groups where many of the participants are already discussing this. So we're already ahead in that sense.
Awesome. And what I referred to before, we have our one-day Payments Leaders Forum, EPAA Connect, coming up in KL on the 16th of July. Definitely, we share that for everybody who signed up today. It will be really interesting discussion in closed room that are related to our workshops. Best way to stay connected is if you scan that QR code or you prescribe. I feel like a news agent now at the end. Those were the things that I get my KPI if I for once cover those 3 slides. So I did it. Most of all, Thank you, Nafis. Thank you, Lars, Anton, and May, and Monica for joining also. Those discussions are so important for us because we get you here and unpack things that are happening now. This is hot topics, and hence there are no answers yet. But you asking the questions of what you see or how to interpret it is what's really important for us. So thank you from us. Thank you for everybody else on the line today. Really, really appreciate it. And have a good evening wherever you are.